dramatic conclusion of our Unparalleled Leadership in Unusual Time series. Couple of items. This will be recorded, so don't say anything that you don't want shared with the interwebs. If you've got questions, please give them to Emily via chat, and we will answer them at the end. Our speaker today is not Darren Kent. It is Lewis Jones, also with Region Bank, but you know, it's an upgrade. That's the way we're going to handle it. It's an upgrade from Darren Kent. So, Mr. Jones, will you give us a 60-second intro biography, and then the floor is yours.
Absolutely. Thank you, Christian. Thanks for your kindness in saying it was an upgrade. Darren likes to tell people that he's the beauty and I'm the brains. So sorry that you have to look at me today, but that's the way it goes. Peace can relate. I see him giggling in the background over there. So anyway, my name is Lewis Jones, as Christian said. I'm the Senior Vice President and Senior Lender here at Region Bank for Oklahoma City Division. For those of you that don't know, Region Bank is a Oklahoma bank, community bank founded in 1898 in Nowata, Oklahoma. And for those of you that don't know where Nowata is, I didn't either till I started here, but it's between Tulsa and Bartlesville. So if you go north out of Tulsa, before you get to Bartlesville, you'll go through Nowata. Our headquarters is in Tulsa, and we have offices in Oklahoma City. We've been in Oklahoma City about 8 years. We have offices still in Nowata, Bartlesville, and a couple of years ago branched out into Springfield, Missouri. Personally, I have been in banking for about 30 years. I was telling Emily earlier, I've kind of run the gamut. I started in commercial, went onto the retail side, and was a regional branch manager for a while. I've done training, started a small business division back in my days with MidFirst, and then kind of worked my way back into commercial. So kind of come full circle for me. But Region, we provide funding for small to middle-size businesses, anything from acquisition to equipment, lines of credit, real estate, SBA, USDA, just about any kind of loan that you can look for. And in Nowata, we actually still do agriculture loans. So if any of you are interested in getting into that market, we can help with that. We try to offer the latest technology and supply timely and high quality information. And basically our bank, we're built on service and relationships. So kind of what I'm going to talk about today is questions you should be asking yourself about your bank. And I'm going to start with, you know, does your bank provide the products and services that you need for your business? I tend to look at banking as like a three-legged stool. And so if you think about three legs on a stool, I think one is like products, one is service, and one is accessibility. So if you pull any one leg out of a stool, a three-legged stool, it falls over. So those are the three integral parts that you should have with your bank. First, let's talk about products. Smaller community banks often don't have all the services that your business may actually need. Larger banks typically have more services that are available. Depending on the size of your business, the products can range from simple checking accounts and loans to high-tech cash management and all the latest online and mobile services. From a service perspective, smaller banks may lack in products. A lot of times they make up for in service. They're usually more nimble, quicker to respond. Larger banks often cater to larger customers, and you run the risk of actually becoming a number, and you have a hard time building or having a relationship with anyone in particular. And then accessibility. Most of the larger banks try to put branches on every corner. They attempt to sell locations as their service because they do lack that relationship factor. Smaller community banks can't afford that $2-3 million investment in each location. So a lot of times they'll go to technology to try and provide accessibility. So, you know, in my opinion today, in today's banking environment, you need all three. Again, you take any one leg away, the stool falls over. So, just check, make sure your bank has all the products that you need, products not only for today, but think about your business as it grows and what products you will need moving forward, because nobody wants their business to stay stagnant. So your bank needs to be able to grow with you. Make sure you have a relationship with your banker. Most people bank with a banker, not a bank. I've moved around a couple of times, and I can tell you, the customers that I had the relationship with have moved with me. And those of you who are familiar with banking know that's not uncommon. So most people are built on that relationship, and they know how that loan officer or account officer is going to take care of them. So if you don't have a relationship with your banker, you need to start one or get one. They should be able to help give you advice, help you when things are good, help you when things are bad. This is a perfect example of when times get tough, how your bank and your banker should be there with you, helping you through this process, whether it's applying for the PPP loans or the EIDL loans, or just talking strategy with you, or a lot of times even your branch or your banker can hook you up with other people that are in similar situations that can give you advice. So don't be afraid to use your banker and ask questions and ask for recommendations how they can help you. In today's environment, you really don't need a branch on every corner. The service is more important. If you're a cash-centric business, then location may be a little more important to you, because you do need access to the cash. But if you're not, between remote deposit, mobile deposit, all the other online services that most banks will offer, you can do your banking with any bank. So make sure that you've got the right banker to do it with. Branches, typically, the more branches mean more overhead. More overhead usually resorts in higher fees. So again, you have a lot more flexibility with the smaller banks. So second thing I would bring up is just kind of digging in a little deeper on the relationship with your banker. Banking should be mutually beneficial for you and the bank. History has kind of shown that a relationship with your banker will help you and the bank stand the test of time. We tell our employees when they're talking to people about banking with us, to bring people in that you want to be friends with. We want our customers to be friends. We want that kind of relationship. You should have that relationship with your banker where you can sit down and talk to them about anything. We want to do business with people we like, enjoy seeing on a daily basis. Meaningful financial relationships should not be entered into lightly. You want to make sure that it is mutually beneficial for you and the bank. The relationship will build over time. Obviously, it's just like any other relationship with your partner. You get to know each other, but over time, you get to know intimate details about each other. And that's the way you make the relationship work. Mutual trust, mutual understanding are the biggest keys there. Third thing, does your banker offer freely to connect you with other customers, resources, like-minded people that can provide you with useful data, research, or experience to help you make good, sound decisions for your company? Your banker should be able to help you with resources that will help you make decisions when you're looking to expand or grow, or in difficult situations or times like we described earlier. Fourth thing, are loan decisions made locally? Are they regional? Are they in-state? Are they out-of-state? Different banks do it different ways. How long does it take to get an answer when you need a loan? How quickly can they or will they respond? The recent PPP loan situation is a perfect example. It was a real eye-opener for many small businesses. I can't tell you how many phone calls we got that said, I applied, I haven't heard anything from my bank. I don't know if I was approved. I don't know if I was declined. I don't know if it was processed, wasn't processed. Again, if you've got a relationship with your banker, you should be able to find out your situation at any point in time. So whenever we're talking about loans in your relationship, obviously there are times of need when you need help. You need, whether it's a interest-only payment or deferral payment or additional loan funds. So again, whether or not those decisions are made locally can impact your business by how quickly your banker can respond and get those things done for you. Finally, kind of what's next. We believe the next 18 months are going to be really challenging. Not only has COVID changed our way of life and whatever the new normal may end up being for all of us, but the oil and gas price plummet has also hamstrung Oklahoma's economy. Depending on your company's financial position, it may be a time that creates opportunity for you to grow, acquire other businesses that may or may not survive. It may be a time to batten down the hatches and look for strategic ways to weather the storm. Each situation is different. Again, if you've got a relationship with your banker, it's a great time for you to sit down, talk to them, ask them their opinion for your business and how they can help get you through or help you to expand or look for ways to acquire. There's no one answer that fits every situation. Again, your strong partnership with your banker will make a huge difference in how you move forward, regardless of which situation you may be in. I talked a little bit earlier about PPP loans, and I wanted to address that. And I know Christian has dealt with this as well. So Regent Bank, we're about a $700 million bank. And that's, it's a decent size for a community bank, but it's not, anything under $1 billion is not considered big at all. Our bank, as of Friday, had done right at 1,600 PPP loans for almost $100 million. So jobs, that equates to about 10,000 jobs that were, quote, saved based on the numbers and the applications that we processed. So we've been slammed with applications. We're still processing them. They have slowed down. I think I've only gotten, I was talking to Emily earlier, I think I've gotten 6 or 8 this week where I was getting 15 or 20 a day the first 3 weeks. So when these came out, the larger banks kind of rushed to get their biggest customers approved first, often ignoring the smaller business owners. Many of those small business owners felt left out or abandoned. I mentioned how many calls that we got, people with frustration, trying to get their loans processed. Then the larger banks pushing through the larger loans caused the funds to run out much quicker the first time around than anyone expected. But there is still money available today, and I would encourage anyone that hasn't sought out the PPP process to at least check it out and see if it would be beneficial to you. So last Friday, SBA actually published the application for forgiveness for the PPP loans. The banks, we just got our guidelines over the weekend. So now we're trying to merge those two together in order to maximize the forgiveness for all the customers. What I would tell you is, keep good records, follow the guidelines. We recommended, well, for every loan we did, we opened an account here at the bank. We recommended that they use that account for payroll, for the rent, for the utilities, so that at the end of the 8-week period, everyone would have a good record of how the money was used. So you can just imagine how much paperwork there's going to be. Again, remember, if you do have one, you have to spend at least 75% on payroll. Um, so borrowers are typically going to be forgiven for the payroll costs during the 8-week period. Covered costs, there are some requirements for FTEs. And I know Christian knows this as well. I won't go into all the details. We can talk more about it if anybody would like to. But our bank has actually invested in a software program that will communicate directly to all of our borrowers, take their applications and their documentation and combine it with what we're going to be required to submit, so we can submit a complete packet to the SBA, try and get 100% forgiveness for as many of our customers as possible. We have 60 days to submit the applications back to the SBA. I think all of them have to be submitted by, I can't remember the date, but I would encourage you, if you haven't already, get the application, start working on it, gathering your documentation. One of the big questions I'm getting now that we're kind of through the PPP rush is about the EIDL loans. Those are not done through the banks. Those are done actually directly through SBA. So the original thing with EIDL, there was a deal where they published that you could get $10,000 that you didn't have to pay back. They weren't real clear on it, but that $10,000 was actually $1,000 per person. So a lot of customers were getting less than the $10,000, and it took several weeks to get anything. A lot of my customers just started getting their portion of the $10,000 in the last week to 10 days. And I've had a few that actually started getting their actual EIDL loans at the end of last week and a couple more this week. So in talking to some folks at the SBA, it's our understanding that they're running 6 to 7 weeks behind on the EIDLs. The EIDLs, again, direct through SBA, you can't get it through your bank, but they are a 30-year payback. The rate's 3.75. There's some requirements there. Can't be used to pay off existing debt. You have to pay off your PPP loan if you had one, if you're going to use it for payroll. I was telling Emily when this thing started, the guidelines for PPP and EIDL have changed multiple times since this whole process started. We're on version 4 of the PPP application. They told us in the beginning you couldn't have PPP and EIDL. Then they said you could. Then they said you couldn't. Now they said you can, but you can't use both for payroll. You can only use one or the other for payroll. So there's a lot of going back and forth. It's been a very fluid process, which is not uncommon. You know, it was new for everybody involved. So we are getting the bugs worked out, working directly through SBA. The EIDLs must be used for ongoing business operations. And just like the PPP, they have the ability to require an audit. So make sure you're keeping your records really good and, just make sure you're using it for the purposes intended. So that's kind of in a nutshell, really all I had today. I figured there'd be a lot of questions about PPP and maybe EIDL. So I just kind of open it up or, flip it back to Christian to add his comments and thoughts, because I know he's worked with it as well.
Well, Lewis, what they didn't tell you was I used to be a banker in a previous life. So I got lots of questions, even if no one else does. So I do agree with you that this whole COVID thing and the PPP loans really was a watershed moment for business owners to understand the difference between large and small banks, right? And hopefully they learned from that. It was something that those of us that had knowledge of the industry understood, but it's sad that it took that kind of service failure to wake a lot of people up. Good news is there's lots of class action lawsuits, so you can sue Wells Fargo if you want.
Now, see, Patricia, I didn't name any names, so
Oh, well, okay, I can. So, one of the questions I've heard from somebody in the industry is they're really worried about community banks and their loss ratios. So your loans going bad, your loans to small business owners, and your small business owners going out of business or struggling, and that having a ripple effect and affecting banks and their ability to survive. Not talking specifically about Regent, but what do you see industry wide in community banks? Do you have a concern with that?
You know, there's always a concern. We've got concern with PPP. When you're making $100 million in loans with no collateral, no guarantees, you know, as an ex-banker, you can relate to the fact that there's concern just even on those. We had an exam a month ago, and I was very pleased that the examiners have at least some understanding. You never know when you're working with those guys how tuned in they are or how realistic they are, but they were very understanding of the times. We have taken a lot of measures. I don't know the percentage, but we have worked with all of our customers that needed it for deferrals, interest only payments, you know, additional funding where appropriate. So from our perspective, we feel like most of the businesses, at least at this point, will survive. Now, the problem is, how long is it going to last? You know, this PPP gets a lot of people through 8 weeks, but where does it go from there? And that's the real unknown in our mind. You know, there's talk out there about another round of PPP or something similar to it. Nothing's been approved. We don't know it's going to be approved. We kind of doubt it. You know, we're kind of hearing the Republicans are going to dig their heels in and say no more until they see kind of what happens. But, you know, the fear is there that if you wait too long, it's too late, and they're already gonna pass. I know that my son works for a company that had to lay everybody off, and they are still waiting on the sidelines. They did the PPP deal, but they're still waiting on the sidelines as to when to reopen. They're afraid, again, that if we do it too much too fast, the resurgence will come back. It could be shut down for a longer period going forward. So they're kind of waiting to see how this all folds out as the governor's plan, you know, the 3 steps for opening back up go. Knock on wood, the latest numbers that I got from Sean is that the Oklahoma numbers have not spiked. Everything still is looking good, and that so far the opening back up is going as planned.
So we have a question here from Mr. Laird, the beautiful Mr. Laird. What are other lending options, 7A, SBA, LOC, or internal lending for smaller mid-sized businesses? Is that correct, Matt?
Okay. You know, SBA, the 7A program is an option. I mean, there's really no limit, Matt, on depending on your business type and the situation for your business. You know, lines of credit. I don't know if you're looking for something to try and help you get through this time or expand or grow, but like I say, the SBA 7A, there's a SBA Express, there's a new one called an SBA Bridge that is going to supposedly bridge people from when they apply for the EIDL over to when they actually get their money. So that's available now. So there's a lot of different options, and it just really, you know, if you have questions, I can give you my direct number and I can talk specifically for what you might need for your business. But basically, we're still lending the way we did before COVID came out. We're still actively doing what we call normal loans or real loans versus just PPP. Obviously, it's been a point of focus because we wanted to help as many people as we could, but we haven't changed our guidelines. We haven't tightened up any. We look at this as an opportunity to help customers. Again, we're an Oklahoma bank. All of our leadership was born and raised here. We did not do any PPP loans outside of Oklahoma because we wanted our focus on our state. And so we really want to try and be there as much as we can for small businesses in Oklahoma.
All right, question here about owners having their lines of credit reduced because of the SBA loans. So they had a $200,000 line of credit being dropped to $25,000 at renewal because the SBA amount pushes them over. I'm assuming maybe some internal lending limit. So what? I guess my question. Let me kind of rephrase this. So one of my favorite banker jokes is they're the people that give you an umbrella and then take it away from you when it starts raining. And you know, the idea that when you need money, like in a situation now where revenues are declined or there's some instability, it's harder to get credit. And I would say that's probably accurate. But now that we're in that situation, how do you handle that?
Well,
is there anything you can do now, I guess?
Well, again, each situation is different. We have not, like I said, tightened our guidelines. We've not gone in and looked at ways to try and limit credit to people. We're more about, you know, if it's physically responsible, we're looking at trying to get more money into the businesses so that they can survive. You know, you don't want to throw, you know, good money after bad, but if it's a viable business and we believe that they can survive, we're still looking at loaning money just like we did before. We have not cut anybody's line of credit. I don't, again, without knowing the circumstances, I don't know if it's a legal lending limit issue or what would cause that to happen, but we have not done any of that.
Okay. Mr. Allen asked the question, if we have an EIDL loan, can we get another SBA loan to refinance some capital equipment? Now, I do know that the EIDLs are, you're not able to use it for purchasing equipment. So how do those two work together?
That's a great question. I believe that you can still apply for the 7A. The EIDL is specifically related to disaster. It is not related to normal course of business. So my understanding is, and I'm not the SBA expert, but my understanding is that you can still apply for an SBA 7A, SBA Express for your equipment needs.
Okay. What makes a good banker? How do you, see, Emily, I can't use that word because it's loaded. So what makes a good banker? I'll just go ahead and leave it at that.
Well, I kind of touched on it, you know, Christian, earlier. And as a reformed banker, you should know better than anybody what it means to be a good banker. But it really is about.
I wasn't, to be clear. I wasn't any good at it.
That's why you're doing what you do now, right?
Exactly. That's why I left.
In my opinion, and I say I've been doing this for 30 years, it's about the relationship. Your banker needs to not only understand your business. I mean, obviously that's critical. They can't help you if they don't understand your business. But they need to care about your business. Nobody's going to care about it the way you do, but they need to care about it and have a vested interest in you succeeding. If they don't care, they're not going to step up to the plate when you need them. They're not going to ask the bank to step up. You know, I'll go to bat for my customers because of the relationship I have with them. And so I mentioned earlier, you know, you should, I won't say you should, a lot of people, most people bank with a banker, not a bank, because of that relationship, because of that willingness of that banker to go to bat for them in good times and in bad. try and get a deal done, try and get you what you need, try and get you those services, or even if it's just get you advice and help by hooking you up with people that are in the same situation you are. And that can be anything from, coaching to financial to, just anything. So relationship. That is the cornerstone, in my opinion, of any banking relationship.
Yeah, and I agree with that. And I've seen bad bankers hide behind the committees or headquarters or whatever, and saying well, I wanted to do this loan, but they won't let me. And I feel like one of the most misunderstood things about banking is how the lending process actually works. Who makes the decision? What's discretionary, what's not discretionary. I tell the story of my first loan committee meeting where I'm presenting on a loan, and I was all prepared for how to answer all these questions that they were going to throw at me, and it was, well, do you think we should do the loan? And I'm like, yeah. I mean, it was so subjective to me. It was more of I thought it was going to be like this analytical algebra type thing, and it was more of what do you think about this customer? And I'm like, yeah, they're good. So the other end of the extreme, I worked for a bank that shall remain nameless, that is in the market, where we had very tight controls on what we could and couldn't do, even the president of the local bank. And, it really was a situation where we wanted to do it, but we couldn't do it. So understanding that relationship and what your banker actually, I don't think it's bad at all to ask your banker, what's your lending authority? What can you decide versus having to go to your boss or the loan committee? And I think those are legitimate questions.
Yeah, and I kind of touched on that when I said, where's the decision made? A lot of the banks, and I've worked for some, kind of like you, I won't pull any of the names out, but the decisions were made outside of the Oklahoma market. And it's really hard whenever you've got people in different markets with different economies and different, types and styles of business and different even characteristics and personalities, when they are making the decisions for your customer, it's really hard. And that's why I touched on that. And it's a great point, Christian, is that, if your decisions aren't being made local, it can impact whether or not you get a loan, because people just don't understand your culture, your economics, your, way of life here. And so that's great questions. You're right. Lenders have certain authorities, and there's a larger authority, maybe with the local market president, and then there's sometimes local committees, and then regional committees, and things like that. So the good thing with a bank our size is we've got fairly good lending ability within our local markets. And then because we're in Oklahoma, we meet a minimum of twice a week. So we're very responsive as far as, you get us a deal, we will get you an answer. We try to have it, depending on the size of the deal and complexity, we try to have you an answer within a week. And because we're local, we can usually do that. Excuse me. I've also worked for those companies where it's all a numbers game. You send it to an analyst and they do the spreads, and the spreads come back and your trends are up or they're down or they're flat. And, they'll look at national averages and compare your averages to theirs, which doesn't necessarily mean anything, because everybody knows in Oklahoma, everything filters in slower, filters out slower. So looking at things on a national basis doesn't really do you any good as a business owner in Oklahoma. So those are great questions to ask your banker. Be prepared to be a little shocked, maybe, depending on where you bank, what the answer may be. But I would highly recommend that you ask those questions. And again, your banker should go to bat for you. I had a boss ask me the same thing, Christian. I wonder if we worked at the same place. It's like, first thing he asked every time was, do you want to make this loan? And, kind of his philosophy was, you should be willing to loan this company, this person money out of your back pocket. And if you're not, then don't put the bank's money at risk. And so, well, to know whether or not you're willing to do that, you've got to have a relationship with that person. You need to know their business. You need to know their character. So, again, that relationship comes into play. And you want your banker to say, heck yeah, I want to do this loan. This guy, I believe he'll battle to the end. He'll do whatever it takes to pay it back. I'm not going to leave you hanging, that kind of deal. So that's what you want.
So, Mr. Laird, back to you. You said, what are the EIDL guidelines? What can you spend it on? I know from looking at it that it's primarily for working capital. There are some restrictions. You can't use it to refinance. You can't use it to purchase equipment. You can't use it to relocate outside of the disaster area unless you get prior approval. You can't take distributions to the shareholders or related parties unless it's for compensation of services and that compensation is reasonable. The working capital thing, so you can't use it to refinance, but you can use it to make loan payments. So if you've got a loan amortization that you're paying off, you can use it to make the loan payments. You just can't go pay the whole thing off. Lewis, what am I missing?
I think that's exactly right. I know it can be used on payroll, but my understanding is if you use the EIDL for payroll, then you have to pay the PPP payroll loan back because you can't use both for payroll. And that's gone back and forth. I was telling Emily before the call started that, we're on version 4 of the PPP loan app. They've told us you can do this, and they said you can't. Then they've said, you can have an EIDL, but you can't have a PPP with it. And then they said you can, but you can't use them both for payroll. So last I heard, you can't use them both for payroll, but you can use the EIDL for payroll. And because the amounts typically, or at least what I'm seeing, are quite a bit larger on the EIDLs than on the PPPs, some of my customers are actually going to take the EIDL and pay off the PPP in order to be able to continue to use payroll outside of that 8-week period.
Yeah, you mentioned the loan forgiveness, and that's I'm going to use the phrase shit show. I can say that, you can't, but yeah, and that's you hit it right on the head. That's as it is right now. Who knows what else is going to come out from the SBA, or what else Congress is going to do, or what the lenders are going to say when you give them the application, or what the SBA is going to tell the lender when the SBA submits that. Yeah, I mean,
we don't know.
No, we don't. And it's very frustrating for business owners to try and make decisions. Some of them are coming up on their end of 8 weeks this week.
Correct.
And they're like, what do I do? And I'm like, I can give you my best guess.
That's what we're saying. As we understand it today, this is the guidelines that we're using, but that doesn't mean it won't change. They've all changed along the last 8 weeks. So it is a guess, but we're hopeful that most of this is going to be forgiven based on the information that we've gotten, provided that the 75% was used for payroll, that there was interest payments made on mortgages. You couldn't use it again for full mortgage payments or rent or utilities. So again, we opened up accounts for each one we did so that they could pay those items out of that account. which would help us provide that documentation at the end that was needed.
Yeah, and I think on the PPP loans, what I've been telling people is, you mentioned it, documentation. Make sure you've got documentation to back up everything that you're doing. Be consistent. Don't be squirrely with it. You know, don't try to juice the numbers. Be consistent in how you're calculating things. And again, going back to the intent of the law was to keep people employed. So I think as long as you're really working towards that intent of the law, they're going to probably give you a lot of grace.
Leeway.
Hopefully.
Yes.
Yeah. Let's see if there's any other questions here that I missed. Deferred payments. So go ahead.
No,
yeah, the deferred payment. So I know the SBA automatically deferred payments on their notes. Actually didn't have to do anything. They just started making payments on your notes, which is nice. Well, for a non-SBA loan, how does a deferral work?
There's two ways. There's a true deferral, which is basically you're just skipping an entire payment and putting it on the back end of the loan. Most of our customers at this point, at least, have opted to do interest only instead. So, you know, depending on where you're at in your loan and how much of it's interest and how much of it's principal, it may or may not do a lot to help you out, and you may need to go for a full deferral. But most of what we've done is interest only, anywhere from 3 to 6 months. Try and get them through the period, get the doors opened back up. Again, just go talk to your banker, tell them your situation, and they should be able to help you. You know, I've gotten a lot of pushback over the years on SBA loans because of the fact there's fees involved and it can get a little pricey. But it was very nice, and most of the people that did do them and paid those fees are very appreciative of the fact that they don't have to make a payment for 6 months. So
is there anything besides a deferral that you can do? I mean, or is that pretty much the only flexibility that the bank has for non-SBA loans?
Yeah, that's really about, like I said, interest-only payments or deferrals. I mean, depending on where you're at in the life cycle of the loan, you could do a refinance, depending on what your rate was when you took your loan out. We've done some rate reductions, which have helped some customers out. Again, depending where your rate is and how long you've been in the loan. And but that's really, those are the key things: rate reduction, deferrals, interest-only payments, refinance, stretch out over longer amortization, you know, if you've been in it for a while and can pull that off.
Lorenzo asked an interesting question. Of course, this comes from the criminal lawyer. How do you spot the bad banker? What are some red flags?
Boy, that's a great question. Fortunately, I have not been around a lot of them. So, you know, I would think, gosh, probably people that come in and try to get you to borrow more money than you need, that won't go to bat for you when you do need something. Obviously, anyone that's going to ask you for something in return for getting them a loan done, and i.e. a kickback or a bribe, have seen those a few times. So most bankers have their heart in the right place, I guess. Some of them are just better at advocating for their customers than others.
Mr. Laird asks, how do you know when you've outgrown your bank? And the follow-up to that is, do you recommend spreading your lending across many banks or concentrating it?
You'll know you've outgrown your bank whenever they tell you that they need to participate your loan to another bank. So, and if you're not familiar with that term, basically a participation is where banks have legal lending limits. It's based on capital. And so just for an example, Regents, our legal lending limit's about $17 million. So if you came in with a $20 million request, the only way we could handle that request would be to participate with another bank. We would be what's called the lead bank. We would be the lead on the loan. We'd gather the documentation. We'd do our approval, and we'd go out and seek another bank to come in and participate with us or take a portion of that loan. The payments go to the lead bank. You really aren't involved with the participating bank, but if your bank ever tells you they're going to participate it out, usually there's a lending limit issue there, which means you've probably outgrown them. Sometimes you just outgrow them from a culture perspective. Some banks are more conservative than others. So if you're in a growth mode and they are not as aggressive as you need to be, then you may have outgrown them and you may need a more aggressive bank. So those are the two things typically that you would look at as far
So
as.
all things being equal, would you recommend, I mean, I know somebody, a business colleague through EO, that intentionally spread his banking around a bunch of community banks rather than doing it. I mean, it would have been easier to do it with one big national bank for sure, rather than having to manage a bunch of different relationships. What are your thoughts on that?
Well, if I'm going to have a relationship with you, I want all your business as long as I can meet all of your needs. But I will tell my customers, for an example, we're primarily a business bank. We don't do much in the way of consumer. Most of our consumers are either in the building where we're located or are employees of our business customers. So, I have people call me all the time for car loan rates. We will do a car loan, but I'm going to be honest and tell you, we don't have the best rate in town. If you want the customer service that I provide and the convenience of having it all in one place, I'll do it for you. But I'm going to tell you as your banker, you can get a better deal. And I'll tell you, as far as I know, where the best deals are, because I want you to be able to be successful and get the best deal you can get. And it's not just car loans. It never hurts to check and make sure that your banker is doing the best they can for you. I had a customer the other day call and say, hey, I got a buddy that got XYZ rate at XYZ Bank. That's a little lower than what you're getting me. And, I said, well, you got to remember, we did your loans before rates dropped. So as an advocate for you, let me go in and see what I can do to get your rates lower, because I want to keep your business. And the other thing is, as a banker, the more business you do with me, the easier it is for me to get more approved for you. So because you're showing loyalty to your bank and your banker, then that's viewed typically by committees and other powers that be as the relationship. So if you're banking a little here and a little there, it's almost like, you're dating the field and you're not committed to anybody. So that can actually hurt you.
It can, but I can speak from experience in that you said culture. So in this situation, it wasn't a lending thing. It was around their ACH services. So we process a lot of ACH because we do payroll for clients. And the lender, the bank said, we don't want to be in this space anymore, so we're tripling our fees and hope you go away. And, we didn't have a contingency plan. And so it took a lot of effort, reactively. So I think you said relationship, and that's key. So having ongoing conversations, because I hadn't had that discussion with my banker. They might have said, we're thinking about getting out of this. You may need to start looking somewhere else.
Right.
But I didn't have that conversation with them. So, and I think it just all the banking products, lending, whatever, it all, yeah. I think that's all we've got, unless anybody else has any more questions they haven't put in the chat. They want to unmute themselves and ask it now.
The only other one I see is, how are you handling contactless banking?
Great question.
No cash.
No cash.
They got rid of it all.
You know, they used to, you will probably remember, they used to say we were going to be a cashless society.
Well, there you go.
We're in a unique position here in Oklahoma City. So I'll describe that first, and I'll tell you what the bank did as a whole. We don't have a drive-through. So we were, right when this started, we were in the process of putting in an ATM, which was full service, where you could actually cash checks, get cashier's checks 24 hours a day, and that all got put on hold. So during this whole time, while we have locked the doors to our lobbies, but you come and we've got signs on the door, you knock, someone will come and greet you. They will take your deposits, they'll handle whatever transactions you need, and then bring it back to you. If you need to meet with a lender or someone on a treasury services product or something like that, just we have you just basically, we ask you 5 questions. You know, have you been out of the country or out of the state? Have you been exposed? Have you run a fever? You know, the typical questions. And if you haven't, then we let you in to meet with whoever you need to meet with. So our other locations have drive-throughs, and so they've done everything strictly through the drive-through. They're looking at opening back up on the 15th of June, provided, again, that there's no spikes as we've rolled out the reopening of the state. So we've continued to have limited contact with customers, but it's because we don't have a drive-through, and so we were forced to actually do that. So.
All right. Thank you. Thank you very much. I'm going to invite everybody to the happy hour at the top of the hour. Everybody's invited. If you will answer the poll, one question, and there are no wrong answers, so answer it randomly if you want. Thank you all very much. And Louis, thank you for your time. And we'll see you later. Thanks, everybody.
Thanks, guys. I appreciate it.
Thanks, Louis.